Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday, 14th of April, recording today's video 6:25 p.m. Eastern Standard Time on the 14th Eastern Time. I was expecting downward movement. That's how the session started. It continued with some upward movement to complete a small green candlestick with a long lower shadow. It fits the main wave count quite nicely, but it's not enough to provide confirmation that the last second wave correction is over and a third wave down has begun. I still think it's most likely that when the S&P breaks out of this sideways consolidation phase it's been in since March, I expect the breakout will be downward. I expect it's in the very early stages of a third wave to the downside. The target at this stage is 1995. Let's have a look at the main wave count. The bull wave count sees a huge trend change here at primary degree, where the bear wave count looks at the trend change possibly at cycle degree, but we do not have confirmation of a sizable trend change. In order to have any confidence in this main wave count, we must have a breach of the lower of this double aqua trend line by a close of 3% or more of market value. When price closes 3% or more of market value below that trend line, I will have a lot of confidence that we have had a sizable trend change here. The bull wave count sees the new downward trend as substantial, probably to last a Fibonacci 13 or more likely 21 weeks in total, to take price down to the fourth wave of one lesser degree price territory, so somewhere below 1730 and above 1647. When I know where A and B within primary 4 have ended, I can use the ratio between A and C to calculate a better target. For now, it has to be a somewhat wide target zone. I will have a lot of confidence in a trend change up here when we have a new swing low below 1980.90. At that stage, multiple alternate possibilities would be invalid. So far within the new downward movement, I expect we have 1212. We need to see 34345. A new primary degree trend should begin with a very clear 5 down at the daily chart level. If minute 2 is not over here and it's continuing sideways, it may not move beyond the start of 1 above 2119.59. Draw this trend line from the start of minute 1 to the end of minute 2, extend it outward. It nearly perfectly shows us where recent upward movement found resistance. That's a little bit more information telling us we should be seeing some strong downward movement from here. In the last few days since this movement here, apart from the spike of volume here when options are closed, the downward day here has the strongest volume. So that indicates to me that overall the trend should be down. When we break out of this consolidation, it's more likely to be down than up. So that favours this main wave count. Let's have a look at how minuet 2 ended and minuet 3 is beginning. Minuet 2 begins down here. This point down here, it's a regular flat subdividing 3, 3, 5 with a longer than usual C wave breaching the upper edge of the channel around this regular flat. Now we have probably a first and now an incomplete second wave. It's quite likely when markets open tomorrow that we could see a bit of upward movement to complete a little zigzag for this second wave correction, which may not move beyond the start of 1 above 2107.65. In the first instance, I want to see this channel around subminuet wave C clearly breached with at least one full hourly candlestick below this trend line and not touching this trend line. Only then will I have confidence that this second wave correction is indeed over and we're in a third wave to the downside. A new low below this point, 2074.29, could not be a second wave correction within micro 5, which means micro 5 would have to be over, which means subminuet C and so minuet 2 in its entirety is extremely likely to be over. A new low below this price point would provide quite a lot of confidence in a third wave down. I will have full and final confidence in the targets with a clear breach of the big orange channel containing this regular flat. At 1995, minuet 3 would reach 1.618, the length of 1. At 1990, minute 3 would reach 1.618, the length of minute 1. Somewhere about the first target is where I expect the next sideways consolidation phase to begin at the daily chart level, and that subsequent fourth wave correction should be shallow because this second wave is very deep, and the fourth wave correction to come can't move back into first wave price territory. When the third wave is complete, the invalidation point will be down here at the end of minuet wave 1. We're not there yet. At the daily chart level, this is the bullish alternate. It's not enormously bullish, it's reasonably bullish. It does expect new all-time highs though. The main wave count sees an ending diagonal over at the high up here. This alternate sees the final fifth wave of the diagonal incomplete. At 2187, the C wave would reach equality in length with the A wave. But the reason why this is an alternate and it has a lower probability is the lower 2-4 trend line of the diagonal is clearly breached by 1, 2, 3 full daily candlesticks below it and not touching the 2-4 trend line. Diagonals almost always adhere beautifully to their trend lines. This is a serious warning that there's something wrong with this wave count. I'll keep publishing it though because we do not have confirmation for the more bearish main wave count, which sees a big trend change up here. So we should assume the trend remains the same until proven otherwise. We should take this alternate or any bullish alternate very seriously while we have no confirmation of a big trend change. Within the triangle of minute B, if the C wave is continuing sideways, it can't move beyond the end of A below 2039.69. That's why a new low below that price point would give me quite a lot of confidence in the main wave count. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.